Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoyed this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Jake Ryan, the general partner of Tradecraft Capital. Jake, thank you for joining us.
How you doing, Hall?
We're doing good. We had an interview about a year ago where we were talking about blockchain, and glad to have you back and looking for maybe an update about where we are with it today. Can maybe tell us a little bit what you think the state of the blockchain market is today and where it's going?
Yeah, I think the crypto asset investment world today is really, a lot is focused around Bitcoin right now. You're seeing the dominance of Bitcoin very high in the market. And you're seeing really that story of whether Bitcoin is sound money and where that's playing in the macro environment. Maybe a couple of weeks ago here in early August, we saw the Chinese yuan break a key significant level that they've been of $7 yuan to the US dollar, and we've seen that broken. And so we're seeing a lot of graphs and correlation of where Bitcoin may be considered a safe haven asset. And so I think if you really talked to investors a year ago, it would have been at the very end of a risk-on trade. And now we're trying to see, we're seeing more correlation that it might start being seen as a safe haven asset class. So I think the trade wars or the trade tariff and currency wars with China are driving some of that. I think you can see some correlation with, if you look at the USD CNY trade, it's somewhat correlated to how Bitcoin's trading. I think you can see some correlation between how Bitcoin trades with gold or the Swiss franc. And I think people more and more are looking for stores of value as what it appears to be all central banks running really for a race to the bottom with. We've definitely set an end to quantitative tightening here in the US. We're seeing easing now when we have 2 or 3 more easing points here from our Fed. You're hearing Europe talk more about another round of quantitative easing. You're just really seeing a lot of monetary policy very going direction of a real race to the bottom. So that is really creating a case for Bitcoin.
Well, it sounds like Bitcoin has become a legitimate alternative asset class with market characteristics. People can start to forecast and plan around it as opposed to just wild speculation that was 2017. And so it sounds like they're giving some stability in there as well. How do you see that going forward? Do you think that's going to become a legitimate currency at some point?
Yeah, I don't think we're looking to replace our central banks and fiat currencies, but I do think Bitcoin is providing a proper check and balance. And so I think we have credit-backed currencies and we have commodity-backed currencies. And for a long time, we've really solely had credit-backed currencies. And I think commodity-backed currencies, gold, other asset classes like that are, and Bitcoin really making its case for being digital gold. I think that, yes, in the coming quarters, we're going to see that play out. And we're going to be looking at the correlation between a lot of these factors here to see if that's playing out as such.
Well, that's great. So we also talked about blockchain itself as an enabling technology for applications and startups. And there was a lot of hype in 2017 with ICOs and people raising funding and so forth. Of course, by the end of Q1 2018, 40% had gone dead. So that was a bit of a wake-up call to the investors putting money in that this is still a very risky business. But what have you seen with blockchain since then to now as far as success stories and what's gaining traction?
Yeah, I think we probably have burned off a lot of that capital that was poorly allocated in 2017. In the last many quarters, we're really in that building phase. These ultimately, crypto assets, most of them at least, are ultimately networks. And so they're building out network effects, and it's going to take a long time before they're able to get some leverage of their network. So just like the founders of Airbnb were out there couch by couch adding partners into their inventory and adding customers into that marketplace, it took many years before they really could find a tipping point and find leverage from that network. And I think you're seeing that happen in the blockchain space as well. We're really in a building phase. Several areas are showing some new products. I think DeFi, or decentralized finance, has been one of the big plays of 2019 with MakerDAO and DAI and Compound and BlockFi and options on crypto assets, being services like LedgerX or back coming out hopefully in September here, to Deribit and BitMEX. So I think one of the big themes for 2019 has been decentralized finance. I think if we saw stable coins really develop in 2018, decentralized finance now really making its case in 2019, I think those two layers then build the next level, which will be, financial services, banking, insurance, those type of services being built on top of decentralized finance in 2020 and 2021. So I do think we're seeing good evolutionary steps in that area. I think that would be one area. Another would be DEXs. I think decentralized exchanges really have made their play. You've heard announcements from Binance with their DEX. You hear a lot from the regulatory environment that most likely unregulated centralized exchanges probably won't be there in 3 to 5 years. So for the most part, we're going to either have regulated centralized exchanges or some decentralized exchanges. And so I think we're seeing that play out more and more throughout 2019. Yeah.
Well, some of the big names back in 2017 were platforms like EOS, and there were applications for identity like Civic, and then Ethereum was making a play to be a standard platform for apps development. What standards are starting to come out of that time, and what's progressing to the next level and what is not?
Sure. So I think, there's two. Let's break that into two. I think the platform wars is still slowly and quietly being played out. I think EOS and Ethereum and Tezos and Cardano and Tendermint and Cosmos are all silently building their platforms, and we still sometime in the future will have that big war of who is going to be one of the dominant platforms for us to build our smart and autonomous contracts on. I think EOS is making a big play more in the gaming, gambling, and social networking space. You've seen releases of like a private messaging service like SenseChat built on EOS. You've seen a lot of gaming and gambling applications built on EOS. And they are looking to launch their major social network, Voice. I think there's a beta release now. You can go to voice.com. And so they are looking to make their play, I think, a big play in the social networking space. So we haven't seen full out products just yet, but we've seen what's going to be a major push with voice.com for EOS.
And now there's a new application class, some call Web 3.0, where they're applying blockchain and technologies of decentralization to technology platforms, Facebook and the like, where you can build your application and then have that live through changes of the API or changes of the core platform, and you can own the data and you can move it wherever you like. Where do you see that today?
Yeah, so I think Web 3.0 is going to be a major investment theme now and going forward. You're seeing a lot of the infrastructure of that being built out and some dApps being deployed. I think you mentioned Civic with being able to have identification. They're closing partnerships, slowly growing. They have partnerships with BitGo and Onfido and have their own Civic wallet. Brave Browser has been out for a while. I think they have something like 5.5 million monthly active users. And so their user base is growing. their token, the Brave token, that token is now incorporated into the browser. So these are incremental moves. Wax being able to exchange and trade virtual items. Wax is launching their own blockchain shortly. They were an ERC20 token on the Ethereum network, but they are launching their blockchain shortly. So you're seeing other dApps like Status, where you can send secure and private messages. So I think we're still in that incremental phase where it's not a huge explosive growth, but we're in that early stage of an adoption curve, the S curve. And I think those are marching along nicely.
Great. Well, let's talk more about what you're doing today. We have a new landscape here with Bitcoin and blockchain moving to the next level in many different ways. And that, of course, requires a new investment thesis. And you have a new one, Age of Autonomy, and maybe you can tell us more about it.
Yeah, I think this investment thesis is really built on 100 years of proven economic theory, and that's the shortwave economic cycle is driven by credit, but the long wave economic cycle, that 50 to 60 year cycle, is really driven by technological revolution. We have seen in the last 200 years, 5 of those episodes, those big cycles. And I think Carlota Perez does a great job of outlining those technological revolutions in her book, Technological Revolutions and Financial Capital. So I think what we're seeing today is that AI, IoT, and robotics have been going on for the last decade, and they have been delivering on automation, and that's been valuable but not transformational. I think while cryptocurrency comes into the picture, as they converge, crypto is the last piece of the puzzle because it's going to allow us to store and transfer value without the need of human intervention. And so as these technologies converge, companies and corporations and organizations are going to be able to build autonomous operations. And I think that's the ultimate competitive advantage. So companies that don't have autonomous operations aren't going to be able to compete with companies that have autonomous operations. So our investment thesis is really driven by that idea of a new age, an age of autonomy.
So autonomy, comprises many different elements. Sometimes it brings in AI, sometimes it brings in blockchain, sometimes it brings in other technologies. Maybe you can break it down as to what are the key drivers that go into autonomy for these areas.
Yeah, I think what you'll see is robotics can be used for in the physical realm, anything that needs to be moved in the physical realm. We can use the Internet of Things as our sensors, and we can use artificial intelligence to make any of the decisions, pattern matching, recognition, and processing, and then blockchain to be able to move and store value, again, without human intervention. I think as we build those autonomous operations and as companies start to glue those together, we'll first start to see blockchain and IoT, and then we'll see how blockchain and AI play and how blockchain and robotics play. But ultimately, those will form together. And so that will happen over, again, the next 50 years as it takes that long, roughly that long to have that technology distribute globally.
Well, those are all different size markets, and the technology seems to be at a different stage, growing at a different rate. What do you think may be the first one that will come to the market and the big winner, so to speak, in its space? Is it robotics or is it one of the others?
I think initially we're seeing some IoT, some applications of IoT and blockchain. So we're seeing early pilot partnerships and pilot programs where either the streaming of data sets or data sets are provided and through a blockchain transaction. And so we're able to get an atomic transaction of transferring data and having an economic transaction happen. So there are several technologies that are being used in this realm, and we're starting to see some pilot projects in specific verticals like energy, e-agriculture. We're starting to see some things, and in healthcare.
And what do you think about government regulation in this space as far as, of course, there was quite a bit of discussion around ICOs and blockchain and tokenizations. Are they securities or are they not? And regulation tends to be a gating factor in any of these that go forward. Where do you see regulation coming into play here?
Yeah, so that's absolutely a part of it. And I think it's going to be a cycle of give and take. I think ultimately we are seeing Bitcoin is absolutely regulated. Ethereum has been determined to be a commodity along with Bitcoin, and those are regulated. I think we're going to start to see sets of frameworks come out for regulation. ICOs, I think one of the biggest reasons those were such an issue is because they were being issued as investments prior to something getting built. And so we did need to have regulation around that and to enforce the laws that were already on the books. As these networks get built out and as these projects and infrastructure are in use, more and more they don't look like securities. But I think ultimately there's going to be a give and take, and we're going to be adding regulation in there as we go. There's big questions where you have regulatory risk in regulatory arbitrage. Where in the world are you going to set up your operations, and what kind of risk profiles does that have in terms of regulation? So we'll see how that plays out in the US. We're seeing more and more positive news eking out. There could be Hester Pierce and others who are advocating for us to get regulation out sooner so that we have more clarity, and so that companies and startups that want to build blockchain companies don't leave the US to be able to build their operations. So we don't want to lose that entire industry in the US. So we'll see how it plays out here. It's definitely something that you have to consider all the time.
Well, we had a conference on blockchain, and one of the speakers made the case that regulatory, we move from the token to the exchange, because it's at the exchange level that no compliance is being done, nothing's being regulated. And that was the fallback in the landscape of blockchain, was the fact that you had these bid-ask spreads on the exchanges, and it looked like any other exchange like the NASDAQ or what have you, but there was almost zero compliance going on compared to what is done on the stock exchanges that we work with today. Do you see the regulatory moving to the exchanges and that becoming the place where regulation really takes place?
I do. And I think more and more that makes sense. I think as we've gone from the 90s to today, free speech or content and code and algorithms and money are really all converging to be the same thing. And so there's going to be a point at where we hit a paradox. What's more important, free speech or financial regulation? Those are actually going to be in conflict. And so ultimately, I think we don't want to be putting entrepreneurs or software developers up for regulatory or criminal processes. It's going to be the people that are operating the technology or operating some of the projects. And so I think the on-ramps and the organizations and companies that implement the technologies are ultimately going to be where the regulation should be focusing on.
Great. Be interesting to see where that comes out as well. So in the last few minutes that we have here, what else should we cover that we haven't about the age of autonomy?
Well, let's see. I think it's just what's going to be possible with that change. I mean, I think if we're able to move in real time and be able to take advantage of opportunities in real time, be able to do analysis 24/7, there's going to be a lot of value add. I think that's also going to be able to help us remove a lot of the rent-sinking intermediaries, and so that we're really getting more value back down to the users and to the community. I think it's just going to be a driving theme that we see over the next couple of decades.
Well, great. Well, how best for listeners to get back in touch with you?
Yeah, you can read on our website at Tradecraft.capital, or you can always reach out to me on Twitter at TradeCraftJake.
Well, great. We'll put that in the show notes, and looking forward to having you back for another follow-up soon. Thanks so much for taking time.
Thanks all.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Paul T. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early-stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.